Good morning, traders and investors. Welcome to today's Strategic Market Outlook. I am Eric from Market Meridian Finance. We are currently navigating one of the most pivotal 24-hour windows of the first half of 2026. The global financial landscape has shifted overnight. What was a market paralyzed by the fear of escalation in the Middle East has transformed into a high-octane risk-on environment. The catalyst? A sudden and historic breakthrough in diplomatic channels between the U.S. and Iran. This isn't just a headline, it is a seismic shift that is repricing every asset class from the S&P 500 to the barrel of WTI crude. In this special broadcast, we are going to break down your trading roadmap for the next 24 hours. We'll look at the technical kill zones, those support and resistance levels where the big institutions are waiting to play, and we'll dive into the specific methodologies for the S&P 500, gold, crude oil, Bitcoin, and the US dollar index. Before we look at the charts, remember the theme of the day: transition. We are moving from a fear-driven market to a growth-driven one, but with that comes extreme volatility. Let's start with the heart of the American economy, the stock market. The S&P 500 is currently flirting with that sun line, those all-time highs that define a generational bull market. With the PPI data coming in softer than expected, the inflation monster is back in its cage, at least for now. This gives the Federal Reserve more breathing room. And the market is pricing in a Goldilocks scenario, the methodology, by the dip, BTD. In the next 24 hours, the trend is your friend. We are seeing strong sector rotation out of defensive utilities and into high-growth tech and semiconductors. If you see a retracement during the New York Open, historical data suggests it will be met with aggressive institutional buying. The technical levels key support. Look at the 6,816 level. This aligns perfectly with the 50-day moving average. If the index dips here, it represents a high probability entry point for long positions. Secondary support sits at 6,740. Key resistance, the immediate ceiling is 6,894. However, the psychological magnet is the 7,000 mark. Expect heavy sell-side pressure as we approach 7K, as many funds will be looking to take profits at such a round number. Watch out for, keep your ears open for the Fed speak. We have 3 FOMC members hitting the wires today. If they pivot back to a higher for longer narrative to cool down the market's enthusiasm, we could see our bull traps at the 6,890 level. Now, let's talk about gold. It has been a wild ride. Gold usually thrives on chaos, so you might expect it to crash on news of a peace treaty. But something interesting is happening. Gold is decoupling from its traditional role as a safe haven and is being traded as a high beta asset. Essentially, it's moving with the liquidity tide. The methodology, range trading with a long bias. Don't chase the high. Gold is currently coiled like a spring. We recommend a breakout strategy. Wait for a confirmed hourly candle close above the immediate resistance before committing heavy capital. The technical levels, a key support, $4,740 is our line in the sand. As long as we stay above this, the structural bull case remains intact. If we break below, look for a quick slide to $4,664, which was the floor established earlier this week. Key resistance, the first major hurdle is $4,850. If the dollar continues to weaken, gold will likely test the Fibonacci extension at $4,913. Watch out for the sell the factor phenomenon. If the U.S. Iran treaty is officially signed and televised today, this geopolitical premium might vanish instantly. We could see a $50 to $70 flash crash in gold as speculators exit. Trade with tight stop losses. If you are an energy trader, I hope you have your seatbelt on. Crude oil has just suffered its worst 12-hour rout in months, dropping nearly 8%. The war premium hasn't just leaked, the bucket has been kicked over. The methodology, fade the rallies, sell on strength. The path of least resistance for oil is currently down. Any bounce toward the $95 level should be viewed as a short selling opportunity rather than a recovery. The market is now shifting its focus from supply disruption to global slowdown concerns. The technical levels, key support, we are looking at $85 as the primary target for this move. If that fails, $82.70 is the next station. Key resistance, $93 is the new ceiling. For the bulls to regain any control, they need to push back above $100, but that looks highly unlikely in the next 24 hours. Watch out for the EIA inventory report. If the data shows a massive build in U.S. stockpiles, it will be the final nail in the coffin for the $90 price handle. Conversely, a surprise draw could trigger a dead cat bounce to $94. Part 5. Digital Assets, Bitcoin, BTC. Bitcoin is the star of the show. While the boomer assets are reacting to treaties, Bitcoin is reacting to pure liquidity. We've seen a massive surge past $75,000, and the on-chain metrics are screaming institutional accumulation. The methodology, momentum chasing. This is a classic short squeeze. Traders who were betting against BTC at $70,000 are being forced to buy back their positions, creating a vertical price action. In the next 24 hours, do not try to pick a top. The technical levels, key support, $75,000 is now our floor. In technical terms, previous resistance has become new support. Below that, $73,000 is the safety net. Key resistance. The eyes of the world are on $80,000. This is more than a number, it's a psychological barrier. Beyond that, the technical blue sky target is $84,000. Watch out for liquidation cascades. When Bitcoin moves this fast, the leverage in the system builds up. A small $1,000 pullback could trigger millions in liquidations, causing a temporary but violent flash dip before the next leg up. Finally, the king dollar. The DXY is under pressure as the peace dividend flows into the euro and the yen. We are seeing a classic risk-off unwind. The methodology, bearish continuation. The dollar is losing its crown as the only safe haven in town. We expect the DXY to test multi-month lows today. Look to sell the dollar against the commodity currencies like the Aussie, AUD, or the Lunai, CAD. The technical levels, key support, we are targeting 98.0. A breach here opens the door to a much deeper correction toward 97.5. Key resistance, 99.5 is the immediate barrier. Unless we see a sudden collapse in the peace talks, it's hard to imagine the dollar reclaiming 102.0 anytime soon. Watch out for U.S Treasury yields. If the 10-year yield starts to spike despite the peace news, the dollar will decouple and rise. Watch the bond market like a hawk. To summarize your next 24 hours stocks, stay bullish but watch the 7,000 level for a potential pause. Gold, trade the levels, not the headlines. $4,850 is the key. Or oil, the trend is bearish, $85 is the target. Bitcoin, it's a momentum play. Don't stand in front of a freight train. Dollar, downward pressure continues as risk appetite grows. The markets are alive, they are moving, and they are rewarding those with a plan. Stick to your risk management, keep your emotions in check, and I will see you at the closing bell. Happy trading!